Crypto Kids, welcome back to another video. This video is going to be a very good one because we're going to be going through the Bitcoin technical analysis. But on top of that, I spent the past week preparing this research report, and we have a lot of fundamental analysis to go through and on-chain data that is going to give us an indication on where Bitcoin may go in the upcoming weeks. The ETF inflows have been incredibly bullish, and this time it's different. This cycle is different. The amount of buying pressure we're seeing on a daily basis is mind-blowing. So if that's something interesting to you, make sure to stay tuned until the end. On top of that, Ethereum is decoupling from Bitcoin, and this to me is signaling a massive altcoin season. But ladies and gents, for all of that, watch until the end, smash up the like button, because actually preparing this video itself, it's taken about a week, and I've been sick the entire week. Yeah, a lot of research has gone in, so a like would be very much appreciated. Subscribe if you haven't already, but guys, I'm Crypto Kid, and let's jump straight into the Bitcoin TA, and then we'll go through all the other topics. But looking at the price of Bitcoin, this is the daily time frame. Bitcoin broke out of this rising wedge. However, we have a TD sequential top. Now, if you're in the free Telegram community, yesterday, approximately 24 hours ago, I posted this analysis in the chat. So I talked about how Bitcoin is having the TD sequential top. Now this indicator is actually a momentum indicator. So after 9 candles of a bullish or bearish move, you see either a top or bottom. Now here we see a top. And what this indicates is a 1 to 4 candle correction. And that's what we're seeing right now. So this next candle that is starting to trade, it is currently a bearish candle, and it's going to be closing in 3 hours and 30 minutes. And keep in mind, this candle closed yesterday was a shooting star candle. Therefore, it's leading me to believe that a short-term correction could be happening here on the Bitcoin price, but I don't think it's going to be a large one. I personally believe that Bitcoin can correct down to 46.9K, and this would be very healthy in the short term. And if the ETF inflows are continuing to be what we're seeing right now, then I think Bitcoin will definitely see, in my opinion, a bounce from that 46.9K level and continue the parabola that we're trading within. And remember, Bitcoin is still forming a bearish divergence. It's not been invalidated yet. And that's why eventually we're going to be seeing some sort of a correction. And when I say eventually, I mean between now or I would say between now and potentially 50, you know what, people are saying $57,000, but I think a more important line of resistance is exactly where we are right now. And the reason being is we're first of all in the golden Fibonacci pocket, and more importantly, Bitcoin is testing this line of resistance that has been trading in since 2015. This line has been support previously where we retested it perfectly in COVID, and then in March of 2023, Bitcoin tested it, saw a small bounce towards the upside, but eventually we broke it down and hit 15.5K. So apologies, this was in 2022. Then in 2023, we tested it as resistance, and now we're testing it again. And in fact, we had a candlestick touch on the launch of the spot ETFs too. So it's getting very weak, and once Bitcoin breaks above it, I think it will be very easy for us to reach new all-time highs. However, that doesn't change the fact that Bitcoin is at important resistance. So we may see a little bit of a small rejection, but because this line of resistance has become so weak, I am expecting, after a very short correction to potentially 46.9K, a continuation of this movement as we have incredible buying pressure from the ETFs. And yeah, so we do still have the bearish divergence. Bearish divergences indicate a reversal, but it does not give you a specific price point where we may see that reversal from. So yes, we know that Bitcoin will correct, but I will personally be waiting until the 3 and 7 period moving averages cross into each other to indicate that this correction will happen. So far, Consensio, which is something I'll be mentioning in every video from now on because it's such an accurate moving average trading strategy that on Bitcoin historically it's been incredible. Like we went through this multiple times. I'll maybe do a dedicated video on this, but I'll leave Consensio. It's made up of the 3, 7, and 30 period MAs, and it works on the weekly time frame for Bitcoin. So far, we're still in this bullish crossover, meaning that I've not switched bearish yet. In the short term, of course, 46.9K is on the daily time frame. This is the weekly. That's still possible. But as I said, as long as the ETFs are buying, I'm not expecting a significant correction back down. Now, Ethereum is looking very interesting, and the reason for this is because we broke above the $2,600 level. If you guys remember in the previous update, I mentioned once Ethereum breaks above 2.6K, we should be expecting higher prices. And that's exactly what happened. We touched $2,866, and we've bought Ethereum between 2.1, 2.2K over on Bitflex. And of course, if you're looking for a place to be accumulating Bitcoin, trading Bitcoin and other cryptos, you can head over to the description of this video and get up to $68,888 worth in rewards. We're going to be doing an awesome giveaway next week, so definitely stay tuned for that. But we've been buying Ethereum at 2.1K dollars, and now, of course, we've seen like a 15 to 18% rally. Wow, way more actually, a 31% rally since. So massive congrats, but the place I will be selling my Ethereum is going to be at 3.1K. Now, granted, yes, capital does flow from Bitcoin to Ethereum and then eventually to altcoins. However, the reason why Ethereum is pumping so much is number one, because of bullish ETF news that we'll get into, and number two, the Dencun upgrade. So Ethereum is going to have another upgrade, and this is going to be the latest one since Shanghai, and it's going to reportedly reduce the fees, the transaction fees, by a significant amount. So it's going to make Ethereum somehow usable, and that's why Ethereum is seeing a push back up. Now, Coinbase stock is surging like crazy because of earnings, but all of that we'll jump into just now. So that was the TA section of this video. Now I want to quickly go over this newsletter. And by the way, thank you so much for all of your positive feedback. I'm going to be doing a weekly newsletter soon. So actually, this was the first edition of it, and I wanted to make it for free so that I can hear your feedback and see if you liked it. And so far, the feedback has been absolutely positive. Thank you so much. I'll leave a link to it in the description below so you can go and read through it in a very deep perspective, because I do cover so much here. But yeah, I'll go through it very briefly. So in the first section, I talk about what's happened in the previous weeks for Bitcoin and how we've come to where we are now. So of course, in the launch of the spot ETFs, we had the hype about, buy the rumor, and then we had the sell the news event following the GBTC outflows. Now, GBTC, not many people know this, but between the spot ETFs, you actually have a 30-day lockup period. So if I were to sell my GBTC shares, I would have to wait 30 days until I reallocate this money into a different Bitcoin spot ETF. And this is why for the past month, we've seen outflows surge, and because of the high management fees. And eventually, just 1 week ago, the GBTC outflows went below $100 million per day for the first time in a long time. And this coincided perfectly with the bullish pennant breakout and, of course, the inverse head and shoulders breakout. And the ETF inflows kept going up and up and up until we hit $631 million in inflows within 1 day. That was incredible. Now, Bitcoin is stuck in this loop where the price of Bitcoin is increasing because the inflows into the ETFs are simultaneously increasing. But, the loop is, the price of Bitcoin goes up, ETF inflows go up, and as ETF inflows go higher, the price of Bitcoin goes higher. It's going to be very interesting to see when this loop breaks, but so far that's what we're seeing, and it is a bit of a funny situation. We only had one red candle, and that was on the day of the CPI event, where the inflation did not come to where it was expected. That's why we traded lower, but immediately after, Bitcoin picked up. And look at this, the data is unbelievable, and the performance of these ETFs are very shocking. So IBIT, BlackRock's Bitcoin ETF, was trading in the number 4 spot out of 3,400 ETFs on the market for highest year-to-date flow. And it was amongst the ranks of some of the most popular exchange-traded funds, such as the QQQ and VU, that have been there for many, many years. And like a newly launched ETF within just 1 month, topping these charts, it's unheard of, And once we compare it to GLD, actually there's insane outflows coming out from GLD at this point in time, and the inflows going into the Bitcoin ETFs are just so wild that we're topping the leaderboards in the spot ETF category. But this is a very interesting chart in terms of on-chain analysis because it measures the total active Bitcoin supply. So the orange line represents right now that 70% of the Bitcoin supply has not been moving for over a year. And this shows accumulation. This shows how many people are hodling Bitcoin. Whenever this orange line starts to dip towards the downside, that's when Bitcoin tends to hit an all-time high and then enters its bear market. So we see this hodling phase, then orange line begins to come down, the Bitcoin price hits a top, and of course we enter into a new bear market as the orange line begins to rise once more. So that's what's been happening in previous Bitcoin cycles. Right now we can observe that the orange line still is yet to correct. Therefore, the price of Bitcoin most likely has some more momentum to keep pushing upwards and reaching a new high between $90,000 to $95,000. That's my personal prediction. Of course, nothing in this video is financial advice, but always do your own due diligence before trading or investing. Super important. And we all know that Bitcoin supply is limited to only 21 million Bitcoin. Currently, the daily reward for Bitcoin miners is 900 Bitcoin per day. And it's going to soon drop to 450 Bitcoin per day after the halving, which is within 55 days. Now, the current demand from these ETFs are 12.5 times higher than what's being supplied into the circulating supply on a daily basis. Currently, we see the supply increase by $48 million a day, but per day, the ETFs are buying up like $200 million on average, which is mind-blowing, and this is going to create a huge supply shock. And remember, the movement that we're seeing right now is happening before the ETFs are in retirement accounts, in 401ks, in Roth IRAs, government treasuries. Like, it's just mind-blowing to see how far we've come before actual adoption. And this will all soon be coming along very fastly, like banks offering loans with Bitcoin as collateral. Those things will happen. And once it does, Bitcoin is going to be at somewhere completely different. And that's why in the macro, I am very, very much bullish. And what we can tell from this data is, so 70% have been accumulating, and once we get 70% of the circulating supply, that leaves us with 13.7 million Bitcoin. So 13.7 million Bitcoin has not been moving. And what we're left with is 5.8 million Bitcoin. And BlackRock and Fidelity alone have accumulated 3% of this remainder supply within a matter of 1 month. So I just hope that this puts it into context. And remember, the retail interest is not back yet. This is a Google Trends chart showing how much people were interested in Bitcoin across different cycles. This was the 2021 top, where Bitcoin was trading at $69,000. Now Bitcoin is like 20-25% away from the all-time high at $53,000, but the interest is nowhere near the same. What we know from CryptoQuant is that 75% of the total Bitcoin bought after 40K was mostly by the Bitcoin spot ETFs. So the amount of pressure we're seeing up has been fueled by options traders, given the all-time high open interest, speculative traders, and ETF issuers. The retail has not come back. Once they do enter back, likely when we break the previous all-time high or come close to it, the price of Bitcoin will surge even more because of the FOMO that we will see. And I'm saying Bitcoin will reach an all-time high. However, this is an interesting comparison because in different countries, Bitcoin has actually already hit all-time highs. For example, in Turkey, Argentina, Japan, Nigeria, Pakistan, Egypt, Bitcoin has been hitting all-time highs. Japan is interesting because they've technically entered a recession. That's why the yen's value is falling right now. But in all of the other countries, they're hyperinflationary environments where their economies are not doing too great and their currencies are devaluing at a very fast basis. And within these countries, or at least in Turkey, for example, the country itself doesn't have enough dollar reserves. So once your country's local currency is falling at such a rate, you need to protect yourself. You either convert it to a stronger currency or you buy gold and silver, right? Now, of course, we have the Bitcoin option. Because the country reserve for dollars is very low, if I wanted to change my Turkish lira into dollars, they actually don't let me. It's super complicated and you don't end up getting the amount that you wish to do so. And what I'm left with is to either buy gold or silver, and that comes with its own hassle and own costs of maintaining it, storing it. If I want to put it in the bank, I need to pay for insurance costs, etc. So here we have the option of Bitcoin that is much more easy to purchase, much more easy to store, maintain, And that's why people in these countries, especially in Turkey, the interest for Bitcoin is so high because they can save themselves and protect themselves against inflation. And don't take my word for it, take Larry Fink's word for it. He is the CEO of BlackRock that have $9.5 trillion under management. And within this interview, you can find it on the article. I would definitely recommend watching it. He highlights why Bitcoin might offer better protection against inflation and geopolitical risks, emphasizing Bitcoin's nearing of its fully diluted market cap, rendering it scarcer than gold. So incredible interview. And in terms of TA, on the macro scale, Bitcoin fired a buy on the super trend. Now the super trend has an average return of 1,210.65%. That is the average return from 3 buys on the super trend. Okay, and that's phenomenal. Look, after a buy signal on the super trend, it is possible that Bitcoin, of course, corrects, but it doesn't go below the max pain point. Here we can see that the max pain is sitting at $25,000. Bitcoin may retrace to 34K, for example, but I really don't see Bitcoin going over 25K anyways, and this is suggesting that a massive move should be following up in the upcoming months, even though if we get a short-term correction. We also know that Bitcoin is broken out of this Fibonacci retracement 61.8, and whenever Bitcoin does do that, we tend to see new all-time highs. I must admit, this move is premature. Usually Bitcoin breaks this retracement level between 60 to 200 days after the halving event. But because of this massive buying pressure from the ETFs, we've hit this earlier on, and this didn't happen ever before. This is what differentiates this current cycle from the previous cycles. The amount of buying pressure we have, the decreasing supply, and I'm just very excited to see what happens to Bitcoin in the upcoming months. Now going over into the breaking news, there's not much left. I know it's been a long video already. I just have a few more on-chain data to go through and a couple of news. So we talked about the interest rates, or I'm not sure if we did, but they're going to be pushed to June. So the probability is now sitting at June. It used to be in May, and that's why the stock market has seen a little bit of a slowdown. But yeah, honestly, look, the United States has a national debt of $34.2 trillion. The entire world has a debt of $220 trillion. Eventually, the world economies will default on themselves, and once they do, then people will need to use something else as a medium of transaction. And once that becomes Bitcoin, you won't be measuring Bitcoin against the United States dollar. The USD will likely, it is predicted that it will fall in value due to BRICS, and once it does, Bitcoin will just simultaneously increase while USD falls in value without any news pushing the Bitcoin price. It's already being classified as a commodity, a hedge against inflation, and that's why compared to the US dollar, Bitcoin will rise, just like it's doing against the Japanese yen, Turkish lira, Nigerian naira, etc. That's why it's such an interesting argument. 1 Bitcoin will equal to 1 Bitcoin. That's what we'll measure Bitcoin with, because the charts will all look like the following. They will all look like this, and once it just looks vertical like that, it's impossible to put a value. So 1 Bitcoin will always equal 1 Bitcoin. We'll be pricing other goods and services with sats or Bitcoin, and yeah, that's why it's not fair to value Bitcoin against the United States dollar, since that's also another currency. It's like 2 currencies together. They should be contrasted with their own context, if that makes sense. But yeah, the interest rates are going to be announced in June, unfortunately, instead of May. BlackRock's ETF has surpassed 100,000 Bitcoin under management, mind-blowing after just 1 month, and people were expecting much lower prices, much lower success for the ETFs, and they've been incredible. They've been performing unbelievably, and it's shocking everyone, and this is driving Ethereum ETF. So Wall Street is demanding the Ethereum ETF because they saw the amount of success that's coming with the Bitcoin ETF. They are pushing for ETH. Now, this was an interview with Gary Gensler, the SEC chair, that happened earlier on this week. And honestly, I just feel so heartbroken. When I first entered the crypto space, the first videos that I watched was of him giving the lectures about blockchain and money in MIT. And this really opened my eyes, and it really breaks my heart that he switched his thoughts on Bitcoin. But it is what it is. It's still definitely beautiful playlist to watch. If you go to YouTube and Google blockchain MIT Coursewave, I would definitely go through one day and just watch all of them, as many as you can, because you learn so much. But yeah, it's very unfortunate. Also, the amount of inflow, or the amount of Bitcoin exchanges hold, has reached an all-time low, meaning people are buying Bitcoin, taking it off exchanges, and this should, based off of fundamental economics, increase the Bitcoin price. Now here you can see that the SEC will be hard-pressed to come up with a new argument for denying a spot Ether ETF when the same factors in the spot Bitcoin ETF approval are also at play here. And they're just going to be very pressured because Wall Street has seen the success, like I mentioned. And look, I do believe that Ethereum is probably a security, given that it's more centralized, it offers staking. It doesn't meet the Howey test very much, but I still do think that there is hope with the pressure on the SEC. But time will tell. We'll see what happens on May the 23rd. That's the important date to be looking out for. But yeah, it's going to be a waiting game. And on top of that, the Federal Reserve Governor said that I don't want banks holding large amounts of crypto ETFs. And what's super bullish is the banks basically came together, all the bank unions in the United States, and they're demanding the SEC to remove some of these digital asset restrictions to make it less expensive for banks to own these crypto ETFs. We can clearly see here they want to FOMO in, they want to put in exposure, they just need ways for it to become less expensive, and the moment that happens, we'll be seeing massive inflows into the Bitcoin ETFs once more. Now this really blew my mind away because the Bitcoin ETP, so all Bitcoin exchange traded products across the world, remember, there isn't just Bitcoin ETFs in the United States only. We have different ETFs in different countries, Canada, Brazil, Australia, Hong Kong, etc. And all of these ETFs hold underlying assets of Bitcoin, or at least most of them. And this number has almost reached 1 million Bitcoin, ladies and gentlemen. I think people don't understand how significant this is, but exchange-traded products, TradeFi space, hold almost 1 million Bitcoin collectively. Now this is super cool. I'm not sure if you saw this before, but 87% of the Bitcoin supply is currently in profit. Unbelievable. It really shows the value of dollar cost averaging, like Michael Saylor here, who holds $10 billion in Bitcoin and is up $4 billion on his investment. Really, biggest genius of our lifetime. You can follow me here at CryptoKid.com over on Twitter to read these in more detail. I do further analysis, but it's best if you read it there. Honestly, we've covered so much in this video already, but the gold ETFs are seeing outflows, whereas Bitcoin is seeing inflows. And also this tweet was very interesting. It described about, or this thread was very interesting. It goes into how much it actually costs to attack the potentially attack the Bitcoin and Ethereum ecosystems, because if you control 51% of the miner supply in terms of Bitcoin, then you could potentially attack it, and this would cause a huge vulnerability. But this is a topic I'll discuss with Da Vinci because he knows so much more about it, and the entire mining and halving aftershocks on the Bitcoin network, that's going to be something very, very important to dive into so that we're all knowledgeable about it, because the hash rate is going to drop, etc., etc. But finally speaking, there are a lot of options expiring today, so do expect volatility in the markets. And just ending off with some quick on-chain data, currently there's a lot of short liquidations that are going to happen or that have happened already. And historically speaking, whenever we do see this much short positions getting wrecked, the market tends to see a reversal afterwards. So I would be a little bit careful there. We know that GBTC is potentially going to have 1.3 billion worth of outflows because the court has cleared to liquidate this much, these GBTC shares worth 1.3 billion, and that could add selling pressure, that could cause the turning point in the ETF inflows, and that could reflect on the Bitcoin price. However, if you did buy the ETFs at launch, you would still be in profits actually after buying it on day one. Incredible news. I hope you enjoyed the video today. I know it was very, very elongated, but I think it was also very informative at the same time. However, ladies and gents, have a great weekend, and I will see you all hopefully on a much shorter video. But guys and girls, have a good day, and I will see you all very soon. Take care, everyone, and bye-bye.